Hey YouTube, how is it going today? Well, in this video, due to popular demand, I'm going to be talking about a company called Muscle Maker Grill Incorporated, ticker symbol GRIL. And then after that, I have some other nice looking chart patterns of some stocks that could be going up in the very near future. Now, if you're new to my channel, I like to trade and invest in typically lower price stocks. So if that's something that interests you, please consider subscribing so you don't miss any future trading or investing ideas. But please remember, I am not a financial advisor, so please do all of your own research before investing in any of these stocks. Now, in case you're not familiar with this company, Muscle Maker Incorporated owns, operates, and franchises Muscle Maker Grill and Healthy Joe's restaurants under the Muscle Maker Grill name. And as of December 31st of 2019, the company had 10 company-owned and 28 franchised restaurants located in the United States and Kuwait. Muscle Maker Incorporated was incorporated in 2014 and is based in Burleson, Texas. And here's a short video with the founder, Rod Silva, explaining his vision for Muscle Maker Grill.
I opened up the first Muscle Maker Grill in 1995, and my whole goal was to make great tasting food that was healthy for the healthy lifestyle, but also the active lifestyle. In 2007, we began franchising. What really motivated me was I wanted to spread across this country just a way to eat healthy, ability for people to get good food at a good price, conveniently, and also to give people the American dream that I got, which was to open up their own business, do something they believed in and were proud of, and now so can make a living from it. Our competitors look to just make their food and make a price point. What we do is we want to make it healthy for you and have a great experience. We typically use 50% more chicken than our competitors. Our food is geared not to only just taste great, but with your health in mind. Our competitors are just making food to make you fill your belly, but we got your health in mind with the taste great food. We want to make our food convenient. We want no excuses for not being able to follow your healthy lifestyle. So we'll deliver to your house, your business, your school. We'll cater your business party, your home parties, your graduations. There's no excuse not to have a healthy meal, but we also want you to remember, we make great food with your health in mind.
Okay, so let's jump over to Seeking Alpha and take a look at some of their financials and see if we can see how things are going underneath the hood. Now, with these lower price stocks, I don't expect the financials to be perfect, but if things are starting to turn around and head in the right direction, you could have a diamond in the rough. But if we look at the revenues, and these are the quarterly revenues going back to September of 2019, we can see that the revenues were starting to pick up, and then COVID hit, and like many restaurants, this restaurant also took a hit, but it looks like they have started to turn things back around, going in the right direction. And next thing I like to look at is the gross profit. We can see the gross profit is still in the red. It looks like it almost got positive, but the last quarter it took another turn for the worse, probably related to the COVID pandemic. But Muscle Maker Incorporated looks like they're having a hard time making a profit. And if we go down to the net income, we can see the net income was starting to get positive, and looks like it's getting even closer. So at least that is on the up and up for Muscle Maker Grill. All right, well, let's take a look at the balance sheet and see how that is shaping out. And the first thing I like to look at is the cash and cash equivalents. And if we go back to September of 2019, you can see they had about $2 million on hand, but then it came dangerously close to running out, and I believe they did a share offering, or maybe they came public. I don't think they've been traded very long, but since then they've raised cash, and their cash and cash equivalents went from $3.7 million in March of 2020 to now $6.1 million. So their cash is definitely doing a lot better. Now let's go down to their total liabilities. And if we look at their total liabilities, we can see it was much higher in September of 2019. But in these last 4 quarters, it looks like it's holding steady right around $5 million. Now let's look and see if they've been bringing shares to the market. And I can't remember the exact date that they went public. We'll see that in the chart, but I'm guessing probably about the last 4 quarters or so is when they went public, because the shares went straight up, and it looks like they did another raise just a few months ago. And if the stock does end up going on a pretty decent run, that's usually when these lower price companies like to do another offering. So don't be surprised if that gets raised in the near future if the stock does go on a run. All right, so let's jump over to my TC2000 charting software and take a look at what's going on with their chart. This is the daily chart for Muscle Maker Incorporated, ticker symbol GRIL. And if we back out a little bit, we can see they've only been publicly traded since early 2020, so there's not a ton of information we can get from their chart. But if I zoom in a little bit closer, in mid-February, they did have a breakout attempt that failed. If you were watching the market and a lot of these lower price stocks, you remember that a lot of these lower price stocks did attempt to break out in February, but they came crashing right back down to earth when the market began to get weak and roll over. Now that doesn't bother me because a lot of stocks did that. What does bother me is the fact that it has been fading these last 5 or 6 days into that yellow line, that 200 period simple moving average. That moving average is one of the stronger areas of support, so we need to have it hold that line. If it does break below it and gets back above it in the next day or so after that, that's not that big of a deal. You can see that happens a lot. But when stocks stay below that moving average, it usually means, at least from a buy point, the pattern is technically shot. But let's back out the chart a little bit more here, and as we can see, this chart is making a very nice pattern, one that I really like to trade. It's making a bullish consolidation, like a triangle consolidation, and if it can bust through this resistance area, this green box that I have on a chart, I think it has a great chance of screaming to the upside. Now, if we look at what's going on right now, it is in danger of not only breaking this trend line, but also that yellow line on the chart. So it's at a very crucial point in the chart right now. If it can hold this area and then start to put more pressure on this resistance area, I am going to be very interested in taking a position in the stock. As of right now, I don't have any money in this stock, and I'm probably not going to be a long-term investor until those fundamentals start to improve a little bit. They look like they're starting to turn in the right direction, but I need to see a little bit more. But there's no denying that this stock is under accumulation. If you can see, these lows are starting to get higher, and they're starting to put pressure on this resistance area. We got some decent volume that's been coming in lately. So if this stock does break out through this resistance area, I'm going to be very interested in taking a position, because I think it would have a strong possibility of continuing to the upside. All right, guys, so let's jump into some other nice looking chart patterns that I found. The first one I want to show you is HC2 Holdings Incorporated, ticker symbol HCHC. And we can see this one is starting to form one of those triangle consolidation patterns that I was just talking about in the other chart, and it has been putting pressure on this resistance area and is now busting through it on pretty decent volume. And if we back the chart out a little bit, we can see this area has been a resistance area for quite some time and is just starting to clear all of it. I would like to see it hold over $4.35 and then start to go sideways a little bit. And if it does that, then I think it has finally cleared all of this resistance area for the last year or so, and it could be headed off to the races. This is a very nice, very bullish pattern. So HCHC is one that is definitely worth putting on your watch list. Next one I want to talk about is OXSQ. If we look at OXSQ, it has been slowly moving up since the pandemic lows, and it's looked like it is starting to break out of this resistance area and potentially be heading up to another high. So OXSQ, it is a thinner traded stock. Right now it has had just under 600,000 shares traded, and that is well above the average daily volume. So this is a lower float stock. I know some of you guys out there like these lower float stocks, and this one looks like it should be heading higher because this is a very nice looking trend it's in right now. Next one I want to show you is CO. If we look at CO, we can see this one is starting to round up and break through this resistance area. It did gap up a couple of weeks ago, sold off, but has since been grinding higher and holding this purple line, which is the 21-period exponential moving average. So this stock has been getting stronger these last couple of days, and it looks like it is poised to be breaking out real soon. This isn't a super big mover, but it does get in nice trends. So if you get in the beginning part of a stock that makes a nice, decent, long trends like this one, it might take a little bit to get there, but you should have a pretty decent gain once the trend is completed. All right, next one I want to talk about is AYRO. Haven't heard this name in quite a while, but this one has been popping up on my accumulation scan, and it looks like today it is starting to break above that old resistance area. We'll have to wait and see if it can hold it, but it did find some good support at that 200-period simple moving average, bounced back above these moving averages, and is now starting to hook up, and it is threatening this old resistance area. So I'm going to be keeping a sharp eye on AYRO. Because I think this one could definitely be off to the races. This has been a fast mover in the past. All right, the next one I want to show you is ICD, and this is not a typical pattern that I like to show you guys, but like I talked about before, these major moving averages, they can be great areas of support, and ICD has come all the way down from $8 all the way down to right around $3.55 to touch that moving average today. And these moving averages can be decent areas for support, so I wouldn't be a bit surprised if the thing has a decent bounce up all the way up to the 50-period simple moving average, which is right around $4.74. So that's a pretty decent size move from here. But you can see when these stocks pull down into these moving averages, this is the 50-period, this is also a major moving average, you tend to get some bounces. So that's what I am anticipating with ICD. I don't know how high it's going to bounce. It could find resistance at this white line. That's the thing about buying these stocks. Once they've come crashing down, you usually have a lot of areas of resistance you have to get through, but it wouldn't surprise me one bit if it did bounce all the way up to this blue line right around $4.75. Okay, everybody, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments about any of these stocks, please leave them down there in the comment section. I will get back to you as soon as I can. Please like the video if you enjoyed it, and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.